Time to do business again. That's what we do on Business Incorporated, 55 minutes around the world of business. And for this episode, here's what we have prepared for you. I'm sure you have heard of the tension in Rivers State after the pipeline vandalism that happened yesterday. We'll count the costs today on the program. The Debt Management Conference ends today in Switzerland. We have excerpts of conversations that are held right there. And in Nigeria, pension plan springing up everywhere. What are the subnationals doing to make it impactful? Welcome to the program. I'm Ini John Mekwa. We start from the global space before we delve into some of those issues, and gold is where we're looking at this time. It's up back to that record high for this afternoon. So spot gold gained 0.10% at $3,029.70 a barrel. US gold is actually down lost 0.2%. And then we see spot silver also down, platinum unchanged, and palladium also down at this time. And of course, what we have here is that investors are worried about the economic slowdown and elevated risks. That's because of United States President Donald Trump's tariff. That's on the one hand, the tariffs flared up trade tensions and include a flat 25% levy on steel and aluminum. The Fed, which will conclude its two-day policy later on today, is expected to hold its benchmark. I think that will be the second time they will be doing that since President Trump took over office. Elsewhere, Israeli airstrikes pounded Gaza and killed more than 400 people. Palestinian health authorities shared this, shattering nearly 2 months of relative calm in that area. So eyes on the geopolitical tension on the one hand, and of course President Donald Trump on the other. Still looking at the World Trade Organization says that it expects growth in global goods trade to continue in the first 2025 after remaining stable in the final quarter of last year. According to WTO's latest goods trade composite indicator, volume of trade edged up slightly to 102.8 from 102.7 in December, and this signals an increase that's above a trend. And the latest reading also suggests sustained trade recovery following the downturn of 2023. Well, I guess it does look like WTO doesn't see a lot of disruption coming from President Trump's tariff. However, the Intergovernmental Organization report indicates growing trade policy uncertainty and looming prospects of new tariffs that could threaten their forecast. Meanwhile, WTO says it's set to release its next global trade outlook and statistics report in April, and that's to provide a clearer picture, obviously capturing some of those disruptions that we have had in recent times. Now let's go to Switzerland, where soaring interest payments are squeezing budgets, forcing government to choose between repaying creditors and developmental plans, as well as funding essential services. The price for this is infrastructural and human development. This is part of the concluding conversations at the 14th session of the International Debt Management Conference, which has been going on in Geneva, Switzerland. As the meeting ends, the Secretary General of United Nations Trade and Development, UNCTAD, Rebecca Greenspan, is asking governments, especially those in developing nations, to prioritize developmental funding.
This is a development crisis because the governments are paying more in servicing the debt than on investment in their people, in health and education. And so you cannot have development if you cannot cover the basic needs and the basic investments that make development in the long run possible. The truth is that the world doesn't have a stable mechanism and an institutional mechanism with timelines, with the transparency in what the process is to take care of the debt restructuring process. So it is very slow for countries and very very murky. They cannot really plan strategically because the process cannot really be foreseen from the beginning.
That conference ends today, but we do hope to get a participant on the show tomorrow to tell us more about conversations and conclusions at the three-day meeting. Now, still in the global space, oil prices slid on Wednesday after Russia agreed to the U.S. President Donald Trump's proposal that Moscow and Kyiv stop attacking each other's energy infrastructure, at least for some time, which could lead to more Russian oil entering into global markets. Russian President Vladimir Putin agreed on Tuesday to stop attacking Ukrainian energy facilities, but stopped short of endorsing a full 30-day ceasefire that Trump had hoped for. Russia is one of the world's top oil suppliers, but its output had waned since the beginning of the war, which resulted in sanctions on Russian energy. A potential ceasefire could lead to an easing of sanctions, which might raise oil supply and ease prices, which is what we see there, red colors right there. U.S. tariff from Canada, Mexico, and China raised recession fears, which also weighed on prices, so that would have a dampening effect on demand for crude. Still in the oil space, but here in Nigeria, after that vandalism and the call for a state of emergency in Rivers State, there's been reactions following that. There are concerns about the impact it could have on investor sentiment across several sectors, especially foreign investors. A financial market expert and managing director of Arthur Stephen Asset Management, Mr. Tunde Amolegbe, who was a guest on Business Morning earlier today, elaborated on some of the potential impacts of this negative sentiment.
As a finance person, I tend to, sort of put myself in the shoes of a foreign investor or an investor of any kind, even local, that is looking to invest in a country. And obviously, I'm listening to news coming from the region I'm looking to invest in. And if those news, skew in a particular direction, I need to be sure that that direction is such that I'm comfortable with. So my advice at this point is that, obviously, luckily for us, our political leaders realize the importance of foreign investment coming into the country. They know the value it adds to the economy. They know the potential for job creation and other benefits. So they've made an effort to try and attract these foreign investments. It is important now that, as much as possible, that those foreign investors we are making appeals to do not see the news coming out of this country being focused so much on issues around politics, issues around insecurity and the like. I mean, they are happening, but as much as possible, you could also affect narratives.
We're still staying on Rivers State and the political crisis there. But yesterday, remember, there was that story about the vandalism, and we wonder how all of this is feeding into the economy and the business, especially the environment of operating business in that state. We have joining us now the National Public Relations Officer of Petroleum Products Retail Outlet Owners Association of Nigeria, that's Petron, Mr. Joseph Obele. Mr. Obele, good afternoon. Welcome to the program. Mr. Obele, can you hear me? Good afternoon. Oh, I wonder what's going on right there. But I guess we would have to try to see that we can get Mr. Obele back or to join the program if we can hear him. Mr. Obele, can you hear me now? Well, we do know that there's a state of emergency in Rivers State generally. We had that announcement by President Bola Tinubu yesterday, last night. And if you've been watching Channels Television, correspondents have been on the street and that was Deborah Balama, and she said, well, it does seem like everyone is going about their businesses. It does seem like, well, people are going on their businesses, but of course we know in the political caucus there'll be conversations going on, and the governor and the State House of Assembly have been suspended for 6 months. I am sure we'll try to get conversations as to how that is affecting economic activities. And then also the vandalism that happened yesterday was a major one, and perhaps the prompt for the president to take the action that he did. We also had our correspondent visit the site of that vandalism. There may be stories that perhaps restoration has been brought, but that's not been confirmed yet to that pipeline, because it costs the country a huge amount of money if it stays inactive every day. So we do hope that has been resolved. But there you have the pictures of that's what you can see, those pictures there of when that vandalism took place. Now, this has not been directly linked to the political crisis. We haven't seen or heard that. But of course, it's one state and one country. And River State, we know, holds a major place when it comes to the country's revenue, when it comes to crude oil production. And already, unfortunately, we have already seen our crude drop from about 1.5 that we had in January to 1.4 in February. So I wonder what this would do to our production by the end of March. Well, hopefully this will be resolved. Peace will come, and then we would have a democratic government in River State, and then the oil production will go on. I wonder if we have Mr. Obele now. Mr. Obele, can you hear me? Oh, it's awesome. We're still having that issue with Mr. Joseph Obele, who is supposed to at least give us the perspective of Petron operating in River State at this time. Well, hopefully we will try and get him, hopefully, before the program comes to an end. Let's find out what's going on right there. But I guess at this point, let's take a break. When we come back, we would head to the market and see if we can get Mr. Joseph Obele to join us on the program. Stay with us. Welcome back. Still watching Business Incorporated right here on Channels Television. We haven't been able to connect back to Mr. Joseph Obele. Hopefully we would be able to do that before the program ends. If not, I guess we'll just stay on that and try to do that tomorrow. But now let's head to the market and get intraday numbers with Aniti Edet.
Yes, good afternoon, Ini.
Good afternoon.
Well, like I mentioned yesterday, that yesterday was a dead cat bounce. I think I wasn't wrong when I said that, because as at the close of trading session yesterday was red, and that red still continues into midweek trading session. Okay, so now let's get to more details about the intraday market numbers for major stock markets around the African continent. And as usual, always starting from the home front. Let's take a look at the numbers there. We see the Nigerian stock, well, it is barely hanging on to the 105,000 level, which has been dropping, consistently dropping all the way from last week. We see the market just hanging by a thread. This number, like we always mention, was just about some couple of minutes ago, 0.31% intraday drop. And then the market here, 105.050.22, as you can see on the screen. And this is because of, we saw the impact of sell pressure on the likes of Boa Cement and some other key market equities there. So that has brought the market's performance month to date down to about a minus 2.3%. And then year to date has also dropped all the way from 4% that we saw in the start of the year. This is March. And then the year to date is now at about a 2.38%. So no thanks to the impact of sell pressure. And it's also coming as the month of March is gradually counting down. We have just less than about some 12 days to the end of the month. So, but so far the market is not really good for the month of March. We always say beware the eyes of March. And then, of course, we're still expecting market factors to still come into play just a few days after the inflation report came out. So the market defied that moderation in the February inflation rate, but then no end in sight for that profit taking because it's still continuing as we speak. Okay, so for the Johannesburg Stock Exchange, 1.27%. And guess what? It has crossed the 90,000. If we can go back to that Johannesburg Stock Exchange there, it has crossed the 90,000 index level. That's the first time in quite a long time there. 90,000, 0.23.38, almost 1.3% intraday, and that market is still going higher as we speak. Okay, for the other two markets on the African continent, so this was the lone gainer, but these two also followed in the red along with Nigeria's stock market. For the close of Tuesday's trading session, the Nairobi Stock Exchange all-share index was down 0.35%, while the EGX 30 for the Egyptian bourse was down by more than 0.5% for intraday. So that's a snapshot for the markets at intraday and for the close of Tuesday for the Nairobi Stock Exchange. Okay, so now we flip our sights down to the fixed income market where we saw yesterday the Treasury bills secondary market. It was quiet, not much of activity going on there. At the same time, the bearish sentiment was also felt in the bonds market segment, which we saw that there's quite some amount of sell pressure also going on in that market. But let's talk more about the activities for the fixed income market. But I think we do not have our guest analyst to talk more about that market. But once we have him, we'll talk more about that market and the current development. Is supposed to be a Treasury, an NTB, what we call the Nigerian Treasury bills auction there, the primary market auction. And that should be about the second or the third to be carried out by the Debt Management Office so far for the month of March. Okay, so now let's talk about the other markets across the world. And this time we're looking at the Middle East. Tadawul, well, not Tadawul first. Let's talk about first the United Arab Emirates. We see that all the markets were mostly in the red. And this is no thanks to concerns by investors about that airstrikes in Israel, by Israel on the Gaza, within Gaza, and they've defied that more than 2 months ceasefire. So, but that massive assault that was carried out around the Gaza Strip early on Tuesday morning, it killed more than 400 people, and I guess much more are going to be injured, and of course that body count is still going on. So concerns about that, the Middle East conflict there between Israel and Gaza, as well as so many other factors, such as so many other factors, including profit taking, has affected all the markets. Take a look at the Tadawul there. That's for the Saudi Arabia Stock Exchange, 0.75% down, 11,705.82. While the Qatari Stock Exchange is also down, almost the same margin, 0.73% at intraday. So it's quite a bloody color there for most of the markets on the Middle Eastern market region. Okay, so now let's talk about the US markets. We flip over there. We see that the stock futures there, they're edging higher. This is because all the markets, investors around the world are eyeing out for the US Fed's rate decision meeting, which they're expecting to keep the markets the range for their interest rate at between 4.25 and 4.5%. So, and also the Fed will be giving out the announcements or the projections for the U.S. economy, which as already at the moment been impacted by what they call a chaotic trade policy announcement by U.S. President Donald Trump, who is just about some 57 days within the countdown to his 100 days in office, which will be on April the 30th. But so far, the markets have not really been that much in the positive. All the three averages there, they've gone into correction territory. Sometime from last week, all of them down by about 10%. So, but for the futures, ahead of the opening bell at 2:30 Nigerian time, the markets are in the green. So they will be awaiting the interest rate announcement. This decision will be announced by Fed Chair Jerome Powell at about 2 p.m. Eastern, and that's about 7 p.m. Nigerian time. So markets will be all out for that announcement from the world's #1 central bank. For later today in the evening of Nigerian time, and then sometime in the afternoon and US time. But for an overview of how the markets closed for Tuesday's trading session, let's bring in our Washington correspondent, Maria Bird.
The U.S. stock market took a bit of a dip on Tuesday as the Dow Jones is down at 0.6%. The heavy tech Nasdaq was down at 1.7%. Companies like Nvidia led the day of having a 3% share lost. And the S&P 500 was also down at 1.1%. It is clear that many investors are watching to see what will happen at the end of the policy meeting. The Federal Reserve is set to meet and expects to have an announcement at the end of the day on Wednesday. This announcement is expected to be one that could be leaving interest rates steady, even though many were hopeful we could see a decline in U.S. interest rates. But with the U.S. economy slowing down and with many trying to avoid a recession, we are not expecting to see many changes in the U.S. interest rates.
Our Washington correspondent Maria Bird giving us details of the U.S. Stock market's close at the end of Tuesday's trading session. So it's not too much of a relief for the market at the moment. So now, okay, so we were talking about, before we go to the Asian markets, we were talking about Nigeria's fixed income market, where we saw at first there's that bearish sentiment across the Treasury bills segment as well as the bond segment, but we'll be talking more about that as well as the current activities at intraday. So let's bring in our analyst for the day, Adiola Aremu, fixed income dealer with FSDH Merchant Bank, to give us details about the fixed income markets. Thank you for joining us, Adiola.
Thank you so much, Mr. Edet, for having me.
Okay, so that's a question. Okay, so I want to ask you my first question. So what's the level of investor confidence within the fixed income market so far this week? Is the middle week, so how's the sentiment going on as we speak?
Thank you for your question. This week, we've seen very huge sell interest, and the market has been largely bearish across the OMO space, NTB space, as well as the bond space. And that's particularly because of how tight the system liquidity has been. That is also made worse by the supplementary budget, supplementary bills auction that the DMO sent or advised the market last week. So because of that, market is expecting slightly higher yields in, addition to the tight system liquidity. And so market sentiment has been very weak across this week.
Okay, so now we've talked about that sentiment, and I know that currently there's currently going on the NTB bond auction, NTB bills auction of about 800 billion naira. So what is the current sentiment there? And then there's going to be a bond auction on Monday. So how are investors moving in line with this?
Yes, as you rightly said, there's the supplementary NTB auction today of about 800 billion, and 500 skewed towards the long end, right? For in terms of the bids we've seen so far today, they've been quite high in comparison to what we saw last week. Last week, for instance, auction closed at 18.39 at the long end, 17.79 at the 182-day bills, and 17% at the 91-day bills. However, based on the bids we've seen today, we suspect that interest rates will increase to about between the 19% handle based on the kind of bids we've seen. And as you've asked again on the bond auction side, I think if we see bills auction close high in the 19 region, then that would also be another reason for the bond auction on Monday to close even higher than the previous one, which was around 19.3%. So I expect that yields inch higher on both NTB auction and bonds auction.
Okay, so that now takes me to my third question with you. Well, on Monday, the MBS released the inflation report, which shows that the inflation moderated further. But have we seen this impact within the bonds market, the bond market in particular, and how are investors reacting to that?
Thank you for the question. Yes, we saw inflation actually taper from 24.48% to 23.18%. But more interestingly was that, food inflation tapered as well as core inflation. So it looks as though we're turning the corner around the inflation numbers. Yes, we know that it's the rebased inflation, but it's still positive regardless. However, this hasn't really translated into the fixed income market, particularly the bonds market. And as I said, that's because a lot of investors are looking at, what does this supplementary bills, calendar mean? So does this mean that, the DMO is looking to borrow even more? And if that's the case, expectation is that yields may still, increase. Secondly, is that we are also seeing that, for the asymmetric corridor that is still quite steep, right? Funding costs remain very elevated. And that's another reason why we're not really seeing that inflation figure actually translate into the market just yet. But I suspect that, the CBN and DMO will have plans for that over the next couple of weeks.
Okay, so now my final question with you now is that with these huge maturities which is expected to hit the system, what is the expectation for the fixed income market next week?
Yes, so I think that with how much you're expecting to hit the system over the next, from this week till next, which is over $1 trillion because of the bond maturity and as well as coupon payments. Ideally, we should see rates taper just a bit, but I think, as I said earlier, that depends on what the stop rates are for bills today as well as bond auction on Monday. Because if we go by just the liquidity figure, ideally, we should see rates actually decline over the next couple of days or into the end of the month. However, in a situation where, the DMO decides to oversell bills today or even bond auction on Monday, the interpretation for the markets will just be that there's still enough interest from DMO to actually get liquidity or get borrowings, right? And that would actually make yields actually continue to inch higher.
All right, so Adiola, I think we'll take a look at, we'll see how that market, how it turns out, because the fixed income market, it moves sideways with the equities market, and every investor wants to put their money where they can make a profit and, make the market more vibrant. But thank you so much for analysis on the show.
Thank you. Thank you.
So that was Adiola Remu, fixed income dealer with the FSDH Merchant Bank, for details of the fixed income market. Okay, final, where we were talking about the Asian markets, regional indexes closing. They closed midweek trading session slightly mixed. Starting off first with the Japanese stock market. We see the Japanese stock market, it was down. This is at the same time where the Chinese central bank, that's the Bank of Japan, Japan's central bank, announced that they're keeping interest rates unchanged at 0.5%. At the same time, they're also that came in line with expectation that the central bank is also weighing the potential impact of a U.S. The impact of the Donald Trump's tariff announcement. So that, of course, revisited across all the markets, and no end in sight for that market. If you can see that on the screen, we saw that the Japanese benchmark index lost about 0.25% in choppy trade to end at 37,751.88, which you can see on your board there, about 0.25% shaved off for the close of mid trading session. For the Kospi index, that's for South Korea, it was up 0.62%. Hang Seng index up by 0.12%, and this is coming on the back of the rally from tech stocks there. So that has helped the market's benchmark index to close the day in the green territory. And then for the markets across China and the Nifty 50, it's a mixed picture there. Shanghai down about 0.10%, while India's benchmark index rose by about this amount. Of course, we also saw that on the other side of the India's benchmark index, that's the BSE Sensex, it picked up also by 0.28% as at early today, so to close in the green territory. So in it, that's a mixed picture, kind of, but the red still have it for major markets if we put it on the average.
Yeah, well, I think it's just pleasant to see a bit of green with the Nifty 50 because there's been a huge sell-off in their stock markets. But corresponding positive sentiment in the bonds market. So I guess some investors are just trying to give it a shot with all of the profit taking that has been happening in the Nifty.
Yeah. And of course, that's one of the key indexes there, which just shows you that some kind of rebound, promising performance is coming for that Asian tiger.
Yeah, thank you so much, Anite. All right, now talking about the market, one of the areas of interest is pension. Seems a bit of activities being rekindled in that area. In November 2024, we're looking at subnationals now. The Kaduna State House of Assembly passed a bill into law that allows retirees in the state to access. Remember, this was a national thing, and then states would have to domesticate it. The 25% of their retirement benefits can be used for mortgage and some other important basics of life. But if the state government, if the states have actually started implementation of this or not, I wonder. Well, let's find out now, at least concerning Kaduna State now, with the Executive Secretary of the Kaduna State Pension Bureau, Professor Salamatu Issa. Professor Issa, thank you so much. Good afternoon.
Good afternoon, ma'am.
So please bring us up to date since this was announced and passed into law. What has been happening? Have you had people able to access this 25% of their retirement benefits?
Actually, the implementation has not started yet. Even though the State House of Assembly has passed the bill, we are still awaiting the government to sign it. One of the issues that was arise for the likely not starting the implementation is because the governor went in to clear any issue relating to that particular clause, and where he has to know if it's not conflicting with the existing Pension Reform Act of 2014, because what the act says is the state government needs to pay accrue right before the assessment of pension or lump sum benefits to pensioners. So we have gone to PENCOM and had management meeting with the PENCOM team, and they have make suggestions to us on how we can go about it. So we are yet to have a meeting with the governor on actually the suggestion given to us by PENCOM. So that's where we are for now.
Do we know how long this process should take, before implementation begins? Because when that announcement was done, there was a lot of applause and expectations. But, even up to now, we're not seeing the benefits of that applause.
Yes, as I said, we actually had a meeting together with the Deputy Chief of Staff, Legal, who is to actually anchor the review of that particular clause and also to advise the governor on what next step to take. So we are actually waiting to have a schedule and have a meeting with the governor and then resolve all conflicting issues surrounding that particular statement that we issued.
So apart from, the 25%, generally, how effective is the pension scheme in Kaduna State?
Well, I've been in that office since 2020, and I can say that we have a very seamless processes regarding the administration of pension. And this is as a result of the structure that has been put in place. So when you talk of...
Hello, the microphone is on.
Hello, Prof. You're on mute. I think something came up on your device. Could you unmute yourself, please?
Is it still on?
Okay, I can hear you now. Hello, Professor Issa, can you hear me?
I can hear you.
Okay, all right, please go ahead.
So for the implementation of the CPS, I think we are among the top performing states in the country. We have our regular remittances of the contributory pension in terms of the employer and employee share. And then we also be very up in our payment of accrue right, even though it's not something we can say that we don't have liability because we have limited resources. So whenever we make a request from the state government, we get what we need to get in order to pay the accrue right. So right now, based on pension assessment, PENCON assessment of Kaduna State, we can say we are behind Lagos in terms of implementation compliance.
All right, but I mean, a lot of Nigerians are still skeptical about the effectiveness of the pension process, especially when it comes to accessing it. How effective is your process? How accessible is it when people really need this retirement? Because apart from this 25, actually, when people leave work or they are out of work, as in, and they're not able to work for some time, they're supposed to be able to access it.
Yeah, if you are with the news, current news, Pencon has just made a release of a policy that guides process of payment of accrual right and other pension matters. And in that particular circular, which was out since this beginning of this week, it stated that the pension administrators or the pension fund custodians do not need to wait seeking for approval from PENCON before payment of any benefit, which to me it's a new development because it will fasten the payment process. I remember before when you make a request for payment, it has to go through PENCON for approval before it goes to the pension fund custodian, then comes back to the pension fund administrator before the person who is supposed to get the entitlement gets it. And that particular circular of this week from PENCON has actually shown that all due processes for payment should be paid within 24 hours. So this is a very good development because in Kaduna State, sometimes when we make payments to retirees, it takes a lot of time. We have to follow up and monitor the PFAs to ensure that they pay the money on time. And we usually request for a feedback report, how many people have been paid from that particular schedule and how many are still standing. So with this new policy guideline, it shows that we are on course and we are ready to actually deliver services efficiently.
Yeah.
So for Kaduna State, I know we are on. We are good to go whenever we have money to pay to pensioners as benefits.
Yeah, but the thing is, a lot of times we hear this exciting news, just like the 25%, but actually the implementation sometimes it seems it doesn't come at all. So how do we ensure that even after pronouncements have been made and, everyone is excited, that it becomes a reality? And it's not just about pensions or Kaduna State.
Pardon? There was a long silence.
Hello, Prof, can you hear me?
Yes, I can hear you now.
Okay, I was asking that, getting the paperwork and the announcement of this, a shortened length of time to access benefits is one thing, but to actually get it done, it seems to be another. A lot of pronouncements and policies actually come that way.
Yes, I agree with you because I don't think in Nigeria we actually have gotten much of what the best standard is in terms of pension management in Nigeria. But with this development, we should be hopeful that the system will improve and the service delivery will also improve. And I know that with the release of funds, the federal government has just announced the issuance of bond of up to 758 billion, which is also a good commendation from the government to pay outstanding arrears. So I don't think with a good digital identification of details of pensioners, I don't think that implementing this particular process is going to be a difficult one like before. And especially if you have all what it needs to have the pensioners' details and the e-payment platform, it's adequate enough to actually make this service efficient enough.
All right. Well, I think you hit it there. If we have that digital identity in place, things will be easier, and we hope that we can have it. Thank you so much, Professor Salamatu Issa, Kaduna State Pension Bureau Executive Secretary, joining us from Morocco.
Thank you, ma'am. You're welcome.
Well, talking about Morocco now, the Executive Board of the International Monetary Fund has concluded the 2025 Article 4 consultation with Morocco and completed the third review under the Resilience and Sustainability Facility arrangement, which was approved in September 2023. The completion of the third review allows the authorities to draw special drawing rights of 375 million, that's about $496 million, bringing total disbursements under the RSF arrangement to SDR 937.5 million, amounting to about $1.24 billion. In 2024, the Moroccan economy was resilient to yet another year of drought. Robust domestic demand helped offset weak agricultural output, and economic activity is expected to have slowed only modestly to 3.2% in 2024. The current account deficit widened somewhat, whereas unemployment remained elevated at about 13%, mainly reflecting the impact of job losses in the agricultural sector. GDP growth is expected to accelerate to about 3.7% over the next few years, supported by a new series of infrastructural projects and continued implementation of structural reform agenda. And still in Morocco, there's an agreement, a mutual exemption from visa requirement between Morocco and Kazakhstan, and that came into force March 19, that's today. And citizens of both countries with national passports can stay visa-free for up to 30 days within 6 months. The agreement is expected to boost tourism, business, and cultural ties. In addition, it has extended its visa-free regime for Kazakhstan citizens until December 31, and this measure opens up new opportunities for planning tourist and business trips. Then we move to South Africa, where ratings agency Moody's expects South Africa's coalition government to reach a compromise that allows the country's deadlocked budget to pass with a focus on fiscal consolidation intact. The budget was postponed last month because of disagreement in the ruling coalition over a contentious plan to raise value-added tax before Finance Minister presented a revised version in Parliament last week. Most big parliamentary parties publicly rejected the amended budget, despite it scaling back the size of the proposed VAT hike, and negotiations are taking place to try to break the impasse. The revised budget aimed for public debt to peak in the fiscal year that starts in April 1, a target that Moody's predicted would remain in place in the version eventually passed by the Parliament. Now let's see what's happening in Berlin. Well, we know President Trump will certainly be part of the conversation, as always. And now cars. Well, cars are playing a major role in this trade war that we see around the world. Lars Holter has the details. Hi, Lars. Good afternoon. Well, it can't be more than President Trump and his close friend, and now we're talking of cars, so it has to be. President Trump has to be somewhere in between all of this conversation.
Yes, Ini, and thanks for having me. Of course, we have conversations about him when it comes to trade all of the time. And now I just got a few new numbers out here that fit into a little bit of a trade development that we've seen over the last couple of months. Those numbers that I found very interesting that I just saw shed light on a rather small segment of the global car trade, but a really important one when it comes to these trade issues. So obviously we've seen large parts of the world and the car markets move towards electric mobility, smaller cars, fewer emissions over the years, but especially in the US, all this has of course long fallen on deaf ears. So I always found it comical when US President Trump complained about US cars not selling well in Europe. It is actually the main reason he is threatening car makers here with those high import tariffs. He has often asked, how many American trucks do you see driving in Berlin? He found it unfair that lots of Americans are driving German cars, Mercedes, BMW, Porsche and such, but that at the same time hardly any Germans are driving US models. Now here's the thing though, which President Trump doesn't seem to see. Much of what sells in the US is just not attractive for customers here. The best example are of course those giant pickup trucks that are prevalent on American roads. They're not fitting within European road rules and regulations, and they're also gas guzzlers, which are looking at gas prices here is just not attractive. However, I'm looking at those numbers. There are a few thousand American pickup trucks indeed driving around here, and they're actually causing more and more problems.
Well, I don't know where to start from. You talked about the size on the roads and even the thousands that you have there are causing problems. But what kind of problems are they causing for the German roads?
Well, let's start with their size. The most popular American pickup truck is the Dodge Ram, and that's 6 meters long. It's over 2 meters wide and high, and it weighs 2.5 tons. Now, to compare, that's a meter longer, half a meter higher, and twice as heavy as a mid-sized German car. So these trucks just take up a lot of space, but mostly, of course, it's safety that people are concerned with. In a collision, a truck like that hits a regular car way above its crunch zone. A head-on crash would not be much of a problem for the driver of that truck, but it would likely kill everyone in the other car. It's mostly the difference in weight, obviously, being a problem here. Of course, there's also the environmental side. The truck takes 15 to 20 liters on 100 kilometers. That is 3 times as much as regular cars, and it certainly doesn't help with reaching those climate goals. However, these trucks do find their way here, and these latest numbers now say we're having about 106,000 now driving here. They're coming in on special permits using a loophole in European Union law, and now more and more experts are asking the government to plug this hole. Meanwhile, they're also advocating for higher taxes on those cars, likely based on engine size. Obviously, these trucks are simply not welcome here, even though that might increase the US president's anger towards Germany and the EU.
Yeah, but last, please, let's not anger President Trump anymore than he is at this time. But perhaps the American car makers will have to make special versions, for Germany. Maybe we can make that request. But let's see what investors are doing at this time.
Yeah, let's look at that. You're right. We should probably not look deeper into what they're doing over there. It's kind of hard to say right now. But here in Berlin, or let's look over to Frankfurt, it seems like investors today are taking a bit of a breather. We've seen markets rise dramatically, of course, over the past few weeks, including yesterday when Parliament voted for that giant debt deal that we've discussed here a few days ago. Berlin is set, of course, to take on 500 billion euros in debt to strengthen its another 500 billion to invest in infrastructure. And since most economists have long said that such an investment is the best way to pull the country out of its ongoing recession, investors are obviously welcoming that move. However, today we're seeing a bit of weakness. It's probably profit taking, I would say, with the DAX down just about 0.5% right now in Frankfurt at the markets. Later today, we'll be hearing from the Fed, again in the US, of course, on interest policy, but Frankfurt will be closed by then, so that is something we'll keep an eye on overnight, and then of course going into tomorrow's trading session.
Yeah, sure. I'm sure early trade tomorrow we'll see the impacts of that Fed decision. Thank you so much, Lars, and talk to you tomorrow.
Thank you, Ini. See you.
Yeah, and I'm sure the crypto community, they will be staying awake to find out what the Fed will decide, even though Ladi has said is a member of the Fed that to be a whole decision.
Right.
Ladi, that's what I heard you say.
Yes, we hear consensus. At this point, it's going to be another hold because the U.S. Fed, they want to really understand what's playing out. With the U.S. economy, with the tariffs and counter tariffs and all of that. Afraid.
But
of
President
global
Trump was
inflation.
not happy with the first hold.
Yeah, he wasn't happy, and
so
definitely he won't be happy with this one. He needs his
Okay.
cut
Okay.
at this point. Well, if you look at the color of the market, it's looking better now. Past 24 hours, we've seen recovery there from Bitcoin, Ethereum, back above $2,000. Quite interesting, 6.05%. But the past hour, we've seen a couple of pullbacks in the market there with Bitcoin and Ethereum, most of the currencies that we track. Let's look at the sentiment there. How are investors feeling? That's looking at the fear greed index. So it's better than extreme fear, but the market is still afraid. 32 points, what we have there. Some top headlines now. We see Picoin. They recently got listed on CoinEx exchange, marking a significant milestone for the project. We're also seeing Kathy Wood. She's saying meme coins will end up worthless. That's her latest statement on meme coins. But she believes that meme coins associated with President Trump might actually still hold up. We'll definitely find out. But let's bring in Solomon Amunde now, financial market analyst. Hello, Solomon.
Yeah, good afternoon, Ladi. Good afternoon.
Good afternoon, Solomon. So we're seeing the oracle of investing there, some might say, Kathy Woods, saying that most of these meme coins will be worthless, after a while. How do you see that?
Yeah, definitely. Most of the meme coins will be worthless. At least as much as 98%, if not even 99% of meme coins will be worthless eventually, because most of these meme coins are just created for pump and dump and just for unreal reasons, actually. So, and the rate at which these meme coins are created, we have over 1,000 meme coins created every day, like far more than 1,000 meme coins created every day. So no doubt, I can say that without any form of doubt, that at least 8% of meme coins will be worthless in the long run. Only a few would survive long term.
And I guess some investors still buy meme coins because they believe that it might do really well, whichever meme coin they're buying. But do you think a time will come where investors will be like, you know what, I don't want to touch meme coins anymore?
I believe that will be very difficult for a time like that to come, because most of these meme coins, they are based on cabals, and they give like the most return on investment for people that get in very early and key into the trend and the hype really early. So it's the high risk, high reward that makes most investors jump in. I mean, meme coins is a very easy way for them to turn like $5,000 to like 500,000 or $1 million. It's really easy. And for people that have less capital, they're key into the hype and the hope of 100x to 1000x. But most times, before you're able to hit that big win, you would have lost a ton of money. So investors would keep draining capital.
So I guess greed is what's driving the flame of that meme coin market. All right, well, we're seeing, current the Bitcoin, Ethereum, they're trying to get back up at this point with Ethereum over $2,000. But from their previous highs, I think Bitcoin is down about 20% from the previous high. The correction, is this still happening, or is this the start of a bear market?
Technically, we're not yet in a bear market. I mean, we've maximum correction we've seen from Bitcoin all-time high is about 30%, which it's very, very fair. In typical bear markets, we see as much as 60% correction, or even more than in some cases. So 30% correction is very, very healthy for Bitcoin. But what has been killing most of the alts, Ethereum included, is Bitcoin's drastic dump and the fact that Bitcoin has been claiming lots of the market dominance. So if Bitcoin can keep consolidating between 79K and 85K, maximum 86K, for the next 3 weeks to 1 month, most of the alts would regain most of their momentum. They would reprice. That's what Ethereum is trying to do right now. It's trying to reprice. But if Bitcoin makes another dip again for like 76K, 78K, you would see most of the alts to make like a lower low. So that's basically what has been happening for like a month plus now.
All right, so for the remainder of this week, what's your trade? Are you going long or short?
Right now, I'm still just adding up to some altcoins, and I'm trying to reduce the rates at which I'm trading features. So the only thing that will make me go long right now is if Bitcoin corrects again to the range of 81, 82K, then I might go long again, because I just closed my Bitcoin long from yesterday. So I just closed it because of the brief pump we saw today. So I'm expecting Bitcoin to likely make another brief correction again, just as it has been ranging for about a week plus now, between 81 and 85. I'm expecting it to still make another downward movement again. But if that doesn't happen, then it will be good news for alts. At least altcoins can have like a 20, 30 to 40% relief pump between today into the weekend.
All right, Solomon Amunde, thank you so much. Always great having your perspective.
Thank you very much, Laddie.
Yeah, so there you have it. Trying to make that decision on an asset class if you're going to go long or short. I'm sure it's very confusing for most investors.
Yeah, so just
in
stay
this
in the
market.
middle. Just stay in the middle.
Don't go long, don't go short.
Don't go
just
short.
stay in the middle and hold on to your cash at this point.
Maybe lose some value.
Right. Thank you.
All right, thank you so much for being a part of Business Incorporated today. Again, we have, of course, fresh episodes for you tomorrow from Business Morning to Business Incorporated. But before then, please go to our YouTube channel and watch the program over and over again. I'm Ini John McCall. See you tomorrow, God's grace.